Oil bounces as China, U.S. statistics ease recession issues. Singapore oil expenses edged up from multi-month lows on Monday as investors' urge for food stepped forward following information on U.S. jobs and Chinese exports that eased recession worries. Brent crude futures had risen 22 cents, or 0.2%, to $95.14 a barrel with the aid of 0439 GMT. U.S. West Texas Intermediate crude became at $89.18 a barrel, up 17 cents, or 0.2%. Both contracts settled better on Friday after jobs increase within the United States, the world's top oil customer, suddenly elevated in July. On Sunday, China additionally surprised markets with quicker than predicted boom in exports. Signs of susceptible demand in U.S. inventories. Ultimate week had recommended trades primarily based on a weakening outlook, stated Stephen Innes, managing director of SPI Asset Management. But the rolls and exports facts had incredibly reversed that view, he introduced. Front-month Brent fees final week hit the lowest levels due to the fact February, tumbling 13.7% and posting their largest weekly drop when you consider that April 2020, while WTI misplaced 9.7%, as worries about a recession hitting oil call for weight on prices. China, the sector's top crude importer, imported 8.79 million barrels per day (BPD) of crude in July, up from a four-year low in June, but nonetheless 9.5% much less than a year earlier, customs statistics showed. Chinese refiners drew down stocks amid excessive crude fees and weak domestic margins even as the country's average exports gained momentum. Reflecting lower U.S. fuel demand, and as China's zero-COVID method pushes recovery similarly out, ANZ revised down its oil call for forecasts for 2022 and 2023 through 300,000 barrels of oil per day and 500,000 barrels of oil per day, respectively. Oil demand for 2022 is now estimated to upward thrust by means of 1.8 million BPD year-on-year and settle at 99.7 million barrels of oil per day, just quick of pre-pandemic highs, the financial institution mentioned. Russian crude and oil merchandise exports persisted to go with the flow in spite of an imminent embargo from the European Union that will take impact on December 5. In the USA, electricity companies closing week reduced the quantity of oil rigs with the aid of the most considering the fact that September. It changed into the primary drop in 10 weeks. Rig U. The U.S. Easy Strength quarter received a boost after the Senate on Sunday handed a sweeping $430 billion invoice intended to combat climate alternate, amongst other issues.